Happy anniversary, UAE! You're young and resilient, and boy, have you come a long way. It's hard to believe you're only 45 years in the making, and through the market downturns, you've constantly been learning and evolving. Sure, there are things that can be done better, but we know it's all in the works. Questions. Has the market bottomed out? Should tenants seek to purchase to avoid paying rent? What is the perception of the first-time home buyer in the UAE, and who are they? Is the secondary property marketplace more favored, or is off-plan property gaining in popularity? Why do we collaborate and share? Dubizzle and JLL have combined forces to help shed some light on how best to answer these questions, among others, in the aim to help drive forward data transparency. Well-vetted data can help you make better decisions as a buyer, tenant, investor, agent, or developer. And if there's one thing we believe in, it's data transparency. After all, sharing is caring. Let's rewind. Legislations have been introduced through the years to safeguard various stakeholders within the real estate industry, further showcase Dubai as an expat-friendly environment and tourist destination, and boost FDI. 2007. RERA is established. Escrow law introduced. Introduction of real estate register maintained by the Dubai Land Department. 2010. Strata law, joint ownership law providing for creation of homeowner associations. 2013. Decree 43 introduces the new rental cap law, rent dispute settlement committee established. New mortgage law is introduced. Transfer fees doubled from 2% to 4% to discourage flipping of properties. Dubizzle publishes first property market trends infographic report due to identified user need for increased data transparency. 2014. Decree 41 issued to regulate the holiday home segment and allow short-term leasing under the Department of Tourism and Marketing. 2015. Dubai ranks 6th globally on value of foreign direct investment. JLL publishes a new report drawing attention to shortage of affordable housing. 2016. Dubizzle study reveals improved first-time homebuyer sentiment within the millennial segment. Dubizzle identify an increase in search volumes for properties for sale in mid-market affordable housing areas such as JVC, Dubai Land Development, and FURJAN. Publication of UAE bankruptcy law. Dubai Economic Department study shows that Dubai attracts 17.7 billion dirhams worth of FDI in the first 6 months of 2016. Let's take a look at the market trends. The Dubai residential market peaked in mid-2014 and has witnessed a softening of average sales price declining around 15% and rentals by around 10% over the past 2 years. This decline is a normal market cycle, as prices had increased at an unsustainable rate from 2012 to 2014. Data from Dubizzle shows that the average rents across Dubai have declined by 4% over the past year, but that over the third quarter of 2016, rental levels remain largely unchanged, leading us to conclude that the rental market is bottoming out. What communities did we look at? To give you a better picture, we looked at the popular mid-market communities and premium communities. Mid-market and premium segments. Let's look at current asking prices in 2 communities per segment. The sale price in these prime communities being on average 117% more and rental price being 54% more than the 2 previous mid-market communities. In a nutshell, if we look at all the previously mentioned popular communities in 2016 alone, rental prices on Dubizzle on average declined by 1%, reflecting JLL's indicative model that rents are bottoming out. Year on year, the mid-market housing segment saw a lower drop in sales price per square foot than the premium housing communities of -2% and -6% respectively. FURJAN apartments were one of the few property types to experience an increase in sales price per square foot of 3%. And Jumeirah Village Triangle Villas saw an increase of 1%, both now selling at 985.5 dirhams per square foot. If we look at 2016 alone, sales price per square foot did not shift as well, showing a leveling off of the market. Who's buying? After UAE nationals, Indian, Saudi, British, and Pakistani nationals topped the list for major contributors to the property sales transaction volumes in H1 2016. UK investment in the Dubai real estate market fell from 9% in the first half of 2015 to 7% in the same period this year. After the British vote to leave the European Union, Brexit, earlier this year, there has been a sharp fall in the value of the GBP, which is anticipated to further negatively impact UK investors' interest in the UAE market, where prices are comparatively higher. Dubizzle dug a little into first-time home buyers here in the UAE, the dominant millennial segment. Arab millennials find Dubai a safer place to live. Hence, investing in a home here rather than renting or buying a home back in their home countries was more attractive. Ripple effect from the Arab Spring. Hence, according to the Dubai Land Department, 7 billion dirhams worth of sales transactions came from Arab countries such as Egypt, Iraq, and Syria. In total, 44% of the millennial group surveyed want to buy a home in the UAE in the next 3 years. What about supply? According to JLL, the year-on-year increase in residential supply from 2017 to 2019 averages 4% compared to an average of 3% in previous years. The newest area to emerge over the past year has been Dubai South, where 1,600 units are scheduled to be completed by 2020. More residential projects are expected to be announced in this location in 2017 as preparation for the Expo picks up momentum. Most of the upcoming residential supply in the selected communities is in the form of apartments. Even in communities that are traditionally mostly villas, such as FURJAN, more apartments than villas are expected to be completed in the next few years. How's 2017 looking? Rents and sales prices have remained largely unchanged in both the selected communities and the overall market over the past quarter, as the market reaches the bottom of its current cycle. We believe that the market will begin to recover during 2017 due to the following factors: gradual recovery of oil prices, stronger confidence as investors recognize the market is close to cyclical trough, continued government investment in hospitality, aviation, healthcare, and other growth sectors, increased construction activity in lead-up to Expo 2020, further improvements to regulatory environment and transparency of real estate market. While moving into the upturn stage of its cycle in 2017, we do not expect the Dubai residential sector to experience a rapid increase in prices in 2017, with increases in most areas likely to remain in single digits. So Dubai, you've got us rooting for you. With legislations constantly being refined to further regulate the real estate market, and Dubai positioning itself as a health and tourist destination in the region building up to Expo 2020, this city's visionary leaders are ensuring it stays expat attractive as it moves into a more mature, sustainable, non-oil dependent economy. Happy 2017!